Hi everyone. Today is Wednesday, June 4th, and this is the Moneyball Morning Report for the Benzinga Pro platform. Today on the docket, let's see, we've got mortgage applications. They just came through. The ADP report comes out in 30 minutes. We have the PMI composite at 9:45, the ISM at 10, the EIA report at 10:30. So a little bit newsy. You want to be careful. Watch key support actions and key resistance actions in order to take a look at what the charts are potentially telling us in this space. Now, let's take a look at the E-mini S&P 500 today. We have an opening range. Inventory is largely positive, right? We've got an upward trend going. What is the opening range? The opening range is about 10 points wide. Not very wide at all. We broke above it and could not stay. We broke below it and held a key support zone defined by a gamma line that, if you're interested, I really would recommend that you get the Menther Q for TrendSpider. You can also get it for Thinkorswim, but it's a little bit more manual at this juncture. All right, so what is trend? Well, it's a bit of a mixed bag. Let's take a look at this. I'm going to compress these so we can see what the zigzag pattern is. It's very fat, and that means over the near term, we're sitting in a little bit of a range. Let's change this Fibonacci. We still have the swing high. Now we're going to put the swing low in, and we can see that this region above 59.39 is now going to be a general floor of support for the traders inside of this big wave. The moving average is up. Price is above the VWAP. We're very far from this moving average, and we do normally see it come back to test it. Not sure what that's going to look like, or if we're going to go sideways and wait for that moving average like we did here. So that's going to be something to note. Momentum is slightly positive, but divergent. Notice, divergent price action, that's a high in momentum and a high in price versus a higher high in price and lower momentum. The cross current suggests to me that we have a potential push to the upside that will exhaust. So it's a little sticky, but if we break below this low region at 59.75, we could have some more short action, particularly since we'll be below the opening range and we'll be below the VWAP. My suspicion is that we come into this moving average over the next couple of days. Hard to say what's going to happen, but bullish pressure is still alive and well, and so dips are buy zones as long as we are above the VWAP. You can take them for small targets to the upside. My upsides today, 59.96, 6,005, and the expected move to the upside is 6,012. Now, what else are we seeing? We're seeing that if we lose this 59.75, a short will likely be confirmed, and the rotation down will push us through and to yesterday's closing VWAP. That's 59.68. The expected move on the low side is 59.50. So be careful if you are thinking about long action. Really be careful to manage your stops. If we lose that opening range high, 59.86, it's probably going to be an area to say, hey, listen, I need to trim the size of this position or completely get out, because if we've had a shallow range and we've hit below it and above it, we could be setting up for a megaphone. Let's go to the NQ. This is the E-mini Nasdaq futures. Our opening formations, zigzag pattern, downward action in a very wide and sticky mess, right? Let's change the Fibonacci. I think it's actually the same, but let's just double check. Here's our Fibonacci. Swing high, swing low. It tells us this region at 21,460 is a support area that, as long as we hold that zone, we've still got an upward track. So the zigzag is really in a minor retrace that could easily continue trend to the north. That's going to be the big picture to watch. Okay, so that being said, the opening range is about 50 points wide, maybe a little shy of 50 points. We broke below it. Now we are above it. The VWAP is below us as support, trending slightly upward. Moving averages are upward. And this trend line I drew pointing out higher lows is clearly still engaged. If we happen to lose 21,000, let's see, 680, we could have our first fade action into the close of yesterday's VWAP close. That's 21,643. We have 21,554 as the expected move below. We have 21,821 as the expected move above. And we have negative divergence. That means price is holding steady while momentum is lagging. That's pretty important, but if we come back and hold these moving averages, this divergent momentum does not matter for the near term. All right? So, what are we staring down? Potential resistance that, if broken, is going to take us to that expected move to the upside of 21,821. Mixed bag, folks. Mixed bag. Let's take a look at the YM. That's the E-mini Dow Jones. The YM is really an important one to trade. It's great if you're trying to manage risk and you're watching what price action is doing. This is a good one to sort of nibble in and learn rhythm of the market. You could also even use a micro. Now, don't look for, oh, but I want to make XYZ. No, your first job is to learn how to trade, right? Learn how to throw a pitch before trying to throw a pitch at 100. Okay? That's very important. It's baseball season, and you know I'm a big fan of baseball, so I'm going to have a lot of baseball analogies. Okay, what are we staring down? Upward trend in the YM. We are holding, the zigzag is upward. We are above the opening range that is about 90 points wide. It looks like we're testing some measure of congestion, right? I still suspect 42,746 on the upside. In general, could get there in a squiggly patch. We have divergent momentum. Moving averages are up, but we're very far away from the 50. Let's make sure our swing high to swing low is still intact. Yes, it is. I'm going to change the color so that we know exactly what we're staring down when we see this lavender line. We can see the break above 42,326 really puts buyers engaged. I saw something the other day that said, a lot of big money is on the sidelines or caught on the wrong side of this move. So the ones who are buying to cover its exit liquidity, if they turn around and jam prices up, we could see brand new highs. It's a very sticky place. A lot of macro guys are sounding the alarm. They've been sounding the alarm for a year, and the markets continue to climb. So a lot of people with a lot of experience are caught on the back foot right now. But if you're following price, you know what the storyboard is. Okay, so we do have a selling candle that's sitting right near maybe the 3 o'clock hour, something like that yesterday. Now that's holding as support. That means the sellers folks that sold in this candlestick, they're going to have to buy to cover. And so that really pushes price to the north for a little bit more. Pullbacks or buy zones. Okay, lower edge, 42,200. And then above that, 42,326. If per happenstance we got ourselves a really pretty trade today, I would like to see, I would love to see a fade down into 42,336, but all we might get is yesterday's closing VWAP. All right? Just be careful right here. It could go either way, especially since we have negative divergence and we're close to the VWAP. It's not like we're far away and it's trending to the upside. Let's take a look at micro Bitcoin. I am a little bearish on Bitcoin at the moment. We have the zigzag pattern being down. We have the moving averages being flat. And we're moving from the bottom of the opening range to the top of the opening range, back to the bottom of the opening range, like we see here. Notice the candlestick formations. I have them highlighted in terms of where we're moving. This candle here from yesterday at 10 a.m., I want to put a line right there. If we recapture that bullish candlestick, and that number is at 105,730, we have a potential bounce to the top of the opening range at 106,500. What's my thought? Well, my thought is the following. I have downward trend. I have flat moving averages, which means I'm going to ping pong between price, and my momentum is really flat. Now notice how negative divergence showed up yesterday. Early morning, big move, retest of that level, smaller momentum. And so you start watching support to get broken in this kind of momentum event. All right? Once that happens, you're able to take the short and it continues, right? Now it's a big sideways patch. If this entire range gets broken, we're going to go down into the next bullish candlestick formation from day before yesterday that happened at 10 o'clock. 2 days before that, 2 days before that, we have the close of the VWAP at 105,032. What's the upper expected move? 107,500. What is the lower expected move? 104,078. Messy, folks. Edges are going to give us our best bet. Let's look at oil. Oil is in a very interesting space. Since June the 2nd, when it created this very big bearish candlestick, it's tried for 2 days to get above it. Are we trending higher? Yes, zigzag shows upward motion. Moving average, upward motion. VWAP, squiggly, but if we try to just say, hey, what is the overall direction of this VWAP, we can see that it's upside. My thought is dips or buy zones. What's a great buying area? Well, it's our zero line from the last swing high. Wow, we got a lot of lines in here, don't we, friends? Me no likey, a lot of lines. Okay, I'm going to remove this fib. I'm going to create the newest swing high low. I should have done this a couple of days ago, but I didn't. Here's the 100% range of the breakout. That's $63. My suspicion is that if we're allowed price to come back into 63, it's going to be a beauty of a buy zone. Okay? What's the stop? Well, there you have it. About 40 points wide. Expected move to the downside, 62.60. So if you said to yourself, hey, why don't I just wait for the edges for that buy event? Go for it. The long at 62.60, $62.60, looks pretty nice. The weekly implied vol move is $63.45, and we are dancing there right now, which could give your $62.60, a pretty nice area. What's the bottom line here? The bottom line here is that we have a coin toss. We have slightly divergent momentum in this topping formation. Not really topping, because it didn't touch it or break above it, so the momentum, technically speaking, is not divergent there, right? It's still holding. Deep dips are definitely going to find buyers. Most definitely. We've got the EIA report coming out at 10:30 Eastern. We really want to be careful. I would not diddle in the middle here. If you wanted to take the $63 event, have at it. The stop, you literally could make it the VWAP close of 2 days prior at 62.85, but keep thinking that we could easily have a long action event coming in off of these bottoming formations here off of the expected move. It looks pretty stinking bullish to me, though that is very messy, especially with the flat moving average. We could be meandering over to this steep moving average that tells us that we are continuing to have buy zones. All right, boy, did I use a lot of words there. Let's jump to gold. As you know, I'm a little bit bearish on gold. I think it's in a topping formation. The topping formation has been crazy. Okay, but we do have the swing low to swing high here, anticipating a test of 3,340. Now, what is trend? Well, the zigzag is down. The 63 moving average, up when we just broke it. The VWAP, up if you look from low to high, but down if you look over the last couple of days. So what does that tell you? Messy. What's momentum? Almost flat. And so if we're looking at that and we're sitting around here, we get very messy patches. For me, I would like to see a bounce to the north, again, to the top of the opening range at 3,382. And then a fade, and in that fade, I will take the short. Could you take a short right here? Yes. If you use opening range trade rules, you'll see that 3,374, that's about the stop. Now, 5 points on a gold stop is not too bad, right? So what would your target be? The expected move below 3,357. Because this moving average is sloped upward, the traders are going to try and recover it, which is why I prefer the shorts at 3,382 rather than the shorts at the bottom of the opening range. My expectation is that we do hit that expected move on the upside, 33.97, at some juncture. But I also think that we could easily fade from that level. So what are you telling me, Anne-Marie? All right, bull flag, bullish action. Bull flag, bullish action. So let the bull flag sort itself out. Remember, bull flags have bearish slopes because it implies that we are going to eventually break to the upside, right? And that's what we're seeing. This also a bull flag. This one doesn't move. So let's look at this. When we stare this chart down tomorrow, we can see what's happened to this flag pattern. Now, the zigzag will change. Right now, it looks just like that, right? It looks just like the zigzag. But we'll see what happens, right? Very, very thought-provoking charts today. Listen, when you look at something and you go, man, that looks muddy, sit on your stinking hands. Don't do anything. Just sit back and go, what am I seeing and what do I understand? Imagine that you are going onto a battlefield. You're just going to rush out there with your handy-dandy little hatchet, you know, where somebody's going to strafe you right down because they've got, you know, machine guns over the rise. Sit back and think it through. Look at what just happened with SPY. It came into yesterday's closing VWAP. What is the trend? Well, it's largely upward. Big fat mess, to be honest, but it's a big fat mess that is moving upward. Okay, I'm going to take the wide instead of this. I'm going to remove this fib and take our largest Fibonacci wave that we can see, which is the swing low to the swing high, and realize that this number at 598, it's a big deal. So if we stare it down, it's probably better to go on a daily chart to see what momentum looks like up here. Very divergent. Have a gander at this. This is very divergent momentum. What's the expected move to the upside? $608. What's the expected move to the downside? $594 or thereabouts. Look at this also. We've got higher lows pushing into this wedge. Easily, people could try to short here and get their faces ripped to ribbons, while it sends us all the way up into 612. Okay? Super important for us to realize. Very, very important for us to realize. There are a lot of people trying to short this, and if they're wrong, they have to buy the market to get out, and that's going to push it higher. Dips are buy zones. VWAP, sloping up. Moving average, also sloping up, flat to sloping up. We have negative divergence. Doesn't mean it can't run higher before it collapses. But negative divergence, pullbacks are buy zones. Where are the pullbacks best? Well, bottom of the expected move area at 594.50 or so. That might be a really nice area to buy if the markets give us a shot at it. All right, let's take a look at the cues. Trend, oh gee. Slightly down to sideways. Let's draw the swing high to swing low on this recent zone. Actually, what are we doing with everybody else? You know what? This one that I did here with the cues, I took to this wave, right? So we've got room to run to get to the 530-ish area. The opening range, tight, right? Buyers trying to get to the top of it. Divergent momentum. Moving average up, but very far away. We're sitting right on top of the VWAP. Could be very sideways. If you wanted to take a long because you were convinced that it would be a nice trade, consider the heavy congestion at $526 or thereabouts. If you want to buy up over here, if you wanted to buy right here at $528.77, you could. Upside pressure, 530, 531. However, negative divergence and a really far move away from the 63 moving average tells me that we might run into a little trouble. So if you do take it, make sure your quick strikes and that you hold your stop, maybe $527.70. Yesterday's big volume candlestick occurred at 3 o'clock, and we're over the top of it. So it does look a little bullish. Not going to lie. Doesn't look wonderfully bullish, but for me, I'd like the dips to take the buy zones. Be very careful, folks. The cues are showing just like a lot of the charts. They're very messy. They have negative divergence and positive trend, which means there's going to be a battleground, but trend is always master and commander. Just watch your risk. If it's not immediately running in your favor, and by immediately, I mean, 15, 30 minutes, or it immediately bounces to a higher space or a lower space than you expect, just cut and run. Cut and run and go slow size today. All right, everyone. See you on the streams. We've got Midday Moneyball and we've got Lunchbox Trading. Take care.